Recently, I've found myself needing a cash ISA more and more. When it comes to my emergency funds, the rates are just too attractive to ignore. So I've been through pretty much every cash ISA provider in the UK and looked at who has the best rates and overall mix of features and benefits. I want to run you through who I see as the best overall, giving you a few options as well that suit different needs. But I want to start with something that I think really is absolutely shocking. The major banks, you know the ones, high street banks, Barclays, Lloyds, all of them, they're taking the mick. Just look at this. If we order the cash ISA providers based on the interest rate that they pay as of the time of recording this, the bottom half of this is dominated by high street banks. 7 of the bottom 8 are some of the largest banks in the UK. These 8 are also part of the 9 banks the FCA, the UK finance regulator, has been working with in an attempt to get them to provide fair value to their customers. That's a really nice way of saying that the big banks are making boatloads of cash at the expense of their customers, and the FCA, the regulator, would like them, if they could, to be a little bit fairer, please. So these banks, they make money loads of ways, but one way is by giving you a rate of interest and by charging another elsewhere on the money. That difference is called the net interest margin. If I can get 5% and only give you 2%, I'm laughing, right? Laughing all the way to the bank, it seems. As these institutions, they're having a great time. Just look at Barclays' share price recently. There are a few reasons for this, but the realisation that the largest retail bank in the UK makes 3% net interest margin currently is certainly one of them. They made $3 billion in the first quarter from this net interest margin according to their latest accounts. Their instant access cash ISA pays 1.66% and they likely generate in the region of 5% on that. There is 1.8 trillion sat in bank accounts in the UK, separate issue in its own right, but 300 billion of that is in cash ISAs. The FCA claims that the pressure they put on banks to be fairer is likely to generate the British public an extra $4 billion a year in interest. And that's on the measly move from 1.66% to 2.11%. That's a 0.45 percentage point rise. Some of the accounts we're going to look at today pay 3.5% higher than these high street banks. Just in cash ISAs alone, the British public are leaving billions on the table. And the FCA are clear what needs to happen here. Informed, engaged consumers switch accounts for better, more competitive savings rates. Well, I'd like to think that that's what we are. So let me inform you on who I see as the best players in the space, offering amazing cash ISA options, loads of great features and benefits, but most importantly, high interest rates, especially when compared to high street banks. I'll go through my top 3 with you and then link them below in the description if you want to check them out. Also, the live interest rates will be there as well, so you can see what they are. Unsurprisingly, none of these will be the high street banks. I focused on easy access cash ISAs today for a couple of reasons. First of all, this is where I keep my emergency funds, so I want to be able to access the cash quickly. And secondly, the rates available on these easy access ones are better than most of the fixed accounts out there anyway, so you get more flexibility at a better rate. But yeah, let me start by looking at the one that I'm going to be using first of all. Every provider I discuss today is regulated and authorised by the Financial Conduct Authority and is such covered by the protection of £85,000 offered by the Financial Services Compensation Scheme. Trading 212. Trading 212 recently introduced a cash ISA to their account lineup. And since then, it's been consistently top of the interest rate charts, currently paying 5.17%. There are no minimum deposit requirements, you can pay in as little as £1. And the interest is paid daily. I went to a trampoline park with my son this morning, forgot to take that off, that's what that is. But anyway, I couldn't spot any other cash ISAs that did daily interest payments like Trading 212 did. These points that I've just covered would probably be enough to make this the best cash ISA on the market for me. But it's actually the combination of their other accounts and using them in conjunction with each other that I think really amps up the use case here. So 212's interface allows you to quickly move your money from one account to another. Their general investment account called Invest Here also comes with a card. So if you have an emergency fund in your cash ISA, you can move that money from your cash ISA to the Invest account and then you can spend it. And any purchases on that card get 1.5% cash back. That's up to January 2025 and then 0.5% after that. On top of this, Trading 212's ISAs are what are called flexible. What that means is you can take money out and put it back in the same financial year and you won't use up your ISA allowance by doing that. So let's say, I have some money in my cash ISA that I need. I haven't paid anything into my ISAs this year, so I've still got the 20k allowance. I take 5k out of my cash ISA, I spend it. I will still have the full 20k allowance even if I pay that 5k back into the cash ISA within that year. But then it goes a level further, this does. I can move money between my cash ISA and stocks and shares ISA on Trading 212 without using up my ISA allowance. So if I have spare savings in the cash ISA and I want to invest some for some reason, it's just an instant transfer and it doesn't use up that ISA allowance. As an investor in the stock market, I prioritise my stocks and shares ISA over the other types of ISAs. But this flexibility to be able to protect my emergency funds from taxation in a cash ISA and get that daily interest rate in a separate account, but then move it over to the stocks and shares ISA without using up my allowance is pretty unrivaled in the space. They also allow a feature whereby you can transfer cash ISAs from another platform. So, if you've got one with a high street bank and you want to move it, you can migrate it without, again, using up your ISA allowance. It's all these reasons why, for me, Trading 212 offer the best cash ISA. They also have a Trustpilot score of 4.6 over 36,000 reviews. Next, I want to talk about Chip. They actually have a lower interest rate than the other two providers we're about to discuss next. But when you compare them side by side, the interest rates that the others advertise aren't all that they promised, really. I actually think if Trading 212's cash ISA didn't exist, I would be going with Chip. They pay interest monthly, and at the time of recording this, they offer 4.58%. They also tell us that they calculate their variable rate by tracking the Bank of England base rate and subtracting 0.26%. So that is their net interest margin. They offer transfers from other providers. This is actually a new feature for them. And in a similar way to 212, this is a flexible product. So you can withdraw and pay back in within the same financial year without using up your ISA allowance. Ideal for someone like me who keeps their emergency funds in this sort of account. But the key is that Chip does not apply any restrictions in terms of how many withdrawals. And they have a very respectable 4.6 on Trustpilot across 3,900 ratings. I think for my purposes, you could be different. The flexible ISA without restrictions would be the deciding factor, even though the interest rate is lower than the next two providers. But to show you kind of why I would make that sacrifice, let me talk to you about Moneybox. They're the only provider that offers a rate that matches Trading 212 at 5.17% currently. Now that rate does include a bonus rate of 0.47% for the first 12 months. So it's actually a rate of 4.7% with a 0.47% bonus added on top. They would feature higher up my list, but they have a minimum balance requirement of £500 to get that rate, which I think is steep. And they only allow you to make 3 withdrawals a year without impacting the interest rate they offer, which drops all the way down to 0.75%. I still think you're getting a much better product and rate here than you do with major banks. But the reason I mention them, the reason I want to talk about Moneybox is I think their cash ISA or lifetime ISA is a market-leading product. It has an interest rate of 5% that drops to 4% after 1 year, so it's worth considering if you're saving for a home. Okay, final bonus one, let's talk about Plum. I want to talk about Plum with you because they're a good example of how what looks good on paper, what looks attractive, might not be when you consider the terms. Plum was founded in 2016 by a former trader and an early employee of Wise. They offer a range of savings and investment products for the UK market, but obviously the one we're interested in is their cash ISA. The rate is currently 4.92%, which is the third highest after Trading 212 and Moneybox. They allow you to transfer from other providers into the service, and they advertise that the minimum deposit is £1. But there are some stipulations and points on this that you need to consider. Under this table, called Rate Breakdown section, they show that the current rate is a bonus one that declines by 0.88% after 12 months. If you transfer in your existing ISA also from another provider, they don't pay the full rate, they pay 4.04%, which is the rate without the bonus. And if your balance drops below £100 or you make more than 4 withdrawals, the rate slashes all the way down to 3%. So I guess then really the minimum deposit amount is actually £100 because if you only put in £1, you get that 3% rate. And if you're transferring ISAs into Plum, the 4% rate is more mid-table in terms of competitiveness. Yes, you can have multiple cash ISAs, but if your incentive here is to get the best rate on your pot of cash, then moving it here comes with this reduction in the rate. The devil, as always, is in the details, isn't it? So just to summarise, any of the providers that I've discussed today are better than having your cash sat in a high street bank, who quite frankly are just leveraging their brand and abusing customer loyalty to cash in. Chip was the market leader in terms of flexible, without restrictions, cash ISAs that pay a good rate, but 212's offering and the ability to move those funds between account types for both spending with rewards and investing in the stock market is now the new bar. Like I said, I'll leave all of the links below for you, and what I'll do is next to those links each month, on the first of each month, I'll update the interest rate so you can see what the current rate is, because these providers at the top of the pecking order change their rates a lot to try and be the top of leaderboards. So yeah, all of that below. But anyway, hope that helps, and I will see you soon.